Welcome back to another weekly market outlook. This is for the 27th to the 3rd of March 2023. Let's take a look at what's been going on in the market last week. We've got the RBNZ, they're hiking 50 basis points, taking New Zealand interest rate up from 4.25 to 4.75%. Both RBA and FOMC released their monetary policy meeting minutes, and both central banks did consider 50 basis point hikes but decided with a 25 basis point hike instead. With the FOMC meeting minutes, the summary for that is still based on economic data that was before the month of February, but we have seen more positive upbeat data coming up from the US. So I think in terms of the FOMC meeting minutes, in terms of the summary, I think it's a little bit irrelevant considering the new data that we have for the month of February. The consideration on the back of the better numbers coming out from the US, that would be a potential for more probability of a 50 basis point hikes in their next meeting in March 21st. So we'll see what happens there, but the probability right now kind of leans a little bit more onto the 50 basis points, but I think the FOMC will remain with a 25 basis points hike. Anyway, moving on, we've got the Eurozone Flash Services PMI that jumps up from 53 to 53. Manufacturing PMI drops slightly to 48.5 from 48.8. We got UK's Flash Services PMI also jumping up to 53.3 from 48.7. Flash Manufacturing PMI also up from 47 to 49.5. We then have the US Flash Services PMI also improving from 46.8 to 50.5, while Flash Manufacturing PMI was up from 46.9 to 47.8. We then have the Japanese CPI number that's higher at 4.3% from 4% up from 4%. Core CPI also higher at 4.2%, up also from 4%. The personal consumption expenditure index, which is another inflation indicator that's closely watched by the FOMC, that's higher at 5.4%, up from 5.3%. The core PCE index was up from 4.6 to 4.7%. Monthly gain on the PCE index was at 0.6%. This was up from the previous month's gain of only 0.2%. The core index was also up 0.6% from the previous month of 0.4%. So for this week, in terms of the calendar, it's we're not gonna have the NFP numbers this week. The NFP number is going to come next week, next Friday. We already have the US durable goods order that's a little bit lower than the previous number at 5.1%, which was also revised down. The consensus was at -4%, so we do have a weaker number from the US durable goods order, so we do see a little bit of the US dollar pulling back a little bit. This week, today we have the France inflation number as well as the Canadian GDP numbers. Tomorrow we've got the Australian GDP numbers as well as the monthly inflation numbers from Australia, but the key data for Wednesday would be the ISM manufacturing PMI numbers. We've previously, we had that flash PMI numbers last week from the US. It was improving, so we do expect the ISM manufacturing PMI to also improve. We got 47.4% to consensus of 48 on the ISM manufacturing PMI, and then we have the flash CPI numbers for the Eurozone. Previously was 8.6%. The consensus is to come in at 8.2%. Unemployment rate remaining stable at 6.6% for the Eurozone. And then we have the ISM Services PMI numbers. Previously was at 55.2, expecting a number to come in a little bit lower at 54.5. But taking the flash services and manufacturing PMI numbers as more of an indication, we might get a number that's slightly higher than the consensus for the ISM manufacturing PMIs and ISM services PMI numbers from the US. All right, let's just jump into the technical. Let's take a look at the dollar index here. So the dollar index continued to push past beyond 104, 105. Right now, this is very close to transitioning above the Ishimoku cloud, i.e. There might be a potential for the dollar index to continue and push even higher. We do expect the 105.63 level to be breached first before we can see any further gain on the dollar index. But once price touches 105.63, then we are likely going to track even higher. We are potentially looking at a move towards 107, which is also the 127.2% Fibonacci extension for the dollar index on the daily time frame. So we are transitioning a little bit here. So very similar with the major currencies. First, let's take a look at the Aussie USD. The Aussie USD here, we do have a strong support at 67 cents, all the way down to 66.75. If we take a look at this number, it was basically the range where the November transition to the upside happened for the Aussie USD, and we have seen price kind of respect the level, the 67 cents level, as a major support for the pair. So it'll be interesting to see if the Aussie USD here manages to break below 67 cents, and we're likely going to see that progress lower to the downside. First, we've got 66 cents, but eventually we are looking at a potential move towards 65 and 64 cents for the Aussie USD. Okay. Right now, this one here has transitioned below the Ichimoku cloud, so that kind of weighs on a little bit more on the probability for the Aussie USD to break even lower. Very similar situation with the Euro USD. Euro USD is transitioning across the Ichimoku cloud here, but we haven't gone past the Ichimoku cloud. We're still trading within the Ichimoku cloud. But one of the key indicators is actually to see if price manages to breach 1.05. If the Euro USD is able to close below the 1.05 level, then we're likely going to track even lower for the Euro USD, potentially returning towards 1.035, 1.025, and potentially 1.01. In terms of resistances, we would take a look at 1.06 initially as the immediate resistance, but for this week we do have a potential for the market to move all the way up to 1.07, but we'll see. This one here is a little bit choppy. We do expect a potential breakout to happen, considering the move on the dollar index, considering the move on the Aussie USD and the pound USD that we are going to discuss after this. There's a higher probability that the Euro USD could move to test 1.05, and we'll need to see if it breaks 1.05, because once it breaks 1.05, I think a lot of position traders or longer term traders are going to jump in to short the Euro USD as well. Right, moving on with the pound USD, this one here remains in a range bound market condition. We still have support at 1.19. Price is just moving in and out of that 1.2 level as well, but once we see that move below 1.2, we're likely going to retest 1.19. Once we do break 1.19, then we're likely going to track lower to the downside, likely towards 1.17 for the pound USD. Again, for the pound USD, very similar situation with the Aussie USD here. It has transitioned below the Ichimoku cloud, not really in a turnabout or reversal kind of way for the pound USD. This one here basically just sideways itself from December all the way up until February, and we just transition across the Ichimoku cloud. We do have a little bit of a resistance coming in at 1.2150, so we do expect, if price manages to pull itself a little bit higher back towards 1.2150, we do expect a little bit of a resistance coming in for pound USD. But I think the key level to watch out for is definitely 1.19. Once we do have that break below 1.19, it really opens up the whole outlook on the pound USD, that it has potentially ended its bull run from October last year. We do have that kind of transitioning moment this week for all of these major currencies here today. Right, next one, it's the dollar Japanese yen. Dollar Japanese yen also has transitioned across the Ichimoku cloud, so a very similar situation with the Aussie USD and the pound USD. This one here has transitioned above the Ichimoku cloud. We are getting comments from the Bank of Japan that they're likely going to keep their ultra easy monetary policy going on, even with the change of the new Bank of Japan governor in April. So I think that's going to turn the Japanese yen a little bit weaker, so we do expect a little bit of a recovery for the dollar Japanese yen, euro yen, the sterling yen as well as the Aussie yen. For the dollar Japanese yen, we might see a little bit of a correction, and might see a little bit of a pullback. If we do see that pullback towards 135, 134.50, and then a bounce, I think a lot of position traders are also going to jump in on the dollar Japanese yen for a move towards 138. So right now for the dollar Japanese yen, the outlook for the dollar Japanese yen is likely going to be bullish. Again, very similar situation with the transition that happens in October, November for the dollar Japanese yen, where it transitioned below the Ichimoku cloud and turned into a downtrend. This one here, it's a first step into reversing itself into a potential uptrend for the dollar Japanese yen. So this is in line with what the fundamentals are showing us. This is in line with what the market is expecting from the Bank of Japan. This is also in line with what the Bank of Japan has basically described themselves as in terms of keeping their monetary policy as it is. No major surprises coming out from the Bank of Japan. So we do expect the Japanese yen to be a little bit weaker compared to the US dollar, compared to the sterling, compared to the euro, as well as the Australian dollar. Okay, so for the dollar Japanese yen, key levels to watch out for, definitely 134.50, 135, and in terms of key resistance, keep an eye out on 138. So that's it for this week. Good luck with your trades, and I'll see you soon.